Welcome back to the channel. Today we're talking a deep dive into Keppel REIT, a defensive REIT position to withstand the market storms of 2025. With investors searching for income, stability, and capital protection, we will examine whether Keppel REIT still holds its place as a cornerstone REIT. Before we jump into Keppel REIT, we need to understand the broader market environment. Inflation is moderating, but central banks are not rushing into rate cuts. Therefore, Singapore REITs have lagged as an asset class in the past 18 months due to higher interest costs, but they are now showing signs of bottoming out. So as you can see from the bar chart shows the standard deviation of returns over 12 months. Singapore REITs have presented itself a lower volatility than both the Straits Times Index and global REIT indices. So in a market where capital preservation matters, REITs with lower price swings becomes more attractive. And when it comes to September, there could be a potential rate cuts which will further down the interest rates. The prices of REITs may recover gradually from there. So Keppel REITs manages a diversified portfolio of office assets valued at 9.5 billion and it accounts for 75% of its holding in Singapore. Keppel REITs occupancy remains high and management has maintained tenant quality throughout prudent lease management. So Singapore assets actually form the defensive backbone of the Keppel REIT. And for the offshores, they act as a form of yield diversification through forex exchange exposure. In first quarter of 2025, Keppel REIT reported a DPO of 2.5 cents, up over 14% year on year. This translates into a forward yield of about 6.7%. So over the years, we have seen that the DPU have steadily grows while the price stabilizes. So Keppel REIT is trading about 0.6 times book value, and this suggests that Keppel REIT is still potentially undervalued compared to other REITs such as Capital Integrated Commercial Trust, which is the CICT, which is probably trading about near 1 times book value or even exceeding it slightly. So for Keppel REIT, the strength lies in the lease structure and debt management. 69% of its debt is fixed rates, insulating against rising rates for the past few years. And from here, we can see that 31% is floating rates. So there are actually limits the downside of risk from potential interest rates hikes, which is unlikely to happen. And with the potential easing of interest rates wise, there could be a rise in the floating rates. And also the lease expiry are actually well staggered across the portfolio, which we can see from 2025 to 2030. And this actually overall reduces the refinancing and rollover costs and risks. And on top of that, there is actually a 30% of leases have the rental escalations, which means that they are actually renewing their lease because of strategic location provided by Keppel REIT in the office arena, such as for example the DBS Bank is actually one of the prominent tenants for Keppel REIT. So like any other REITs, Keppel REIT does faces a risk as well, and one of the key risks that many Singapore REITs right now are facing is the foreign exchange exposure. So the valuation actually pressures rising cap rates in the offshore environment, and also the hybrid work environment and trends are also affecting the office demand. And from here, one of the key risks to actually watch on is the 300 million debt, which is actually maturing in this year 2025. So will this actually be renewed at a lower cost of borrowings then that will be likely to actually happen in September to the end of year if the lower rates are being materialized by the Federal Reserve. And so if you are looking for stability, yield, and REIT exposure wise, then probably you can look into Keppel REIT, which remains one of the top REITs to monitor. And I'm a investment representative of Tiger Brokers. And if you're keen to engage my stocks trading services, do click on the link in the description below to open a trading account with me. Once again, do like and subscribe to my channel. And I'll see you. Adios.